100K, 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 every day, we don't play, here to stay, we here to stay, concentrate, anticipate, it's okay,
Hello, my crypto juggernauts and family. Welcome to the Mx3 Crypto Report, your destination for relevant crypto information when you need it the most. My name is Mike, and we have Michael.
Hello.
And we have Mark.
Hello.
And we are Mx3. Thank you for tuning in today. As per usual, please subscribe, give us a like, and hit that notification button and leave a comment. We appreciate your support as we continue to give you more valuable content. Okay, let's move to our news segment for today. All right, beautiful. So guys, have you heard about, 90% of Bitcoin's supply, has been mined already? Have you heard about that?
Yeah. I'm sorry. Go ahead, Mark.
I was just going to say, I haven't heard about that at all. I know there was a limited amount of Bitcoins that are out there, but I haven't heard that about half of it's already been mined.
Yeah. Sorry, go ahead, Michael.
Okay. Yeah, because, well, I'm a little perplexed that only 40% has been mined, because back in 2020, it was the halving. So half of what, Bitcoin could be mined was mined. So wouldn't that be 50%?
That's interesting. Let me read a little bit more into the article, because there's an article that I was looking to over here on cnbc.com, and it said that let's see here, 90%. Let's scroll all the way to the very top here. Yep, there we go. So it said that 90% of Bitcoin supply has been mined, and 4 other crypto updates you should know. So this was a very interesting article. Let's scroll down a little bit. So right there it says that though it briefly popped above $50,000 on Sunday, the price of Bitcoin retreated at the start of the week. The largest cryptocurrency by market value is trading at around 47,358 as of Monday afternoon, according to Coin Metrics. Other top cryptocurrencies also down, including Ether, the second largest cryptocurrency. Ether is currently trading at around $3,813. Along with the price movement, here are 5 important things that happened in the cryptocurrency space last week. Crypto executives testified before Congress on Wednesday. On Wednesday, crypto industry executives testified before the House of Financial Services Committee. The hearing was called by committee leader Representative Maxine Waters, District, California, in an effort to...
Wait a minute. Maxine Waters still alive? Okay,
I believe so.
Okay. Maybe I'm thinking about somebody else. Okay. I wonder if her constituents know that.
Yeah. I think so.
All right.
Okay.
Sorry.
No, you good, Mike. You on the right. We on it. Okay. In an effort to understand crypto assets better and discuss potential.
Sorry, man. I didn't mean to throw you off like that.
No, you good. In an effort to understand crypto assets better and discuss potential regulation. Okay, cool. Because of their nascent stage of development and unique underlying technology, digital assets trade in markets that are fundamentally different from traditional financial markets. Alicia Haas, Coinbase Chief Financial Officer, said in her testimony, as a result, existing regulatory regimes often do not accommodate this new technology. The discussion was overall. So let's scroll down a little bit because I'm not seeing the 90%. I don't know what's
Actually,
going on.
when they said the traditional financial regimes, what are they referring to? Banks, or what? What do you think they're referring to?
Yeah, because that's all they know. I mean, that the statement in and of itself is kind of weird because they're really just kind of coming up to speed in the crypto space, you know, in terms of how things work and operate, or are they trying to transfer the normal mechanisms for the existing financial infrastructure over to, you know, the crypto platform and assume that they work the same way?
So
it's kind of weird to me. That statement just freaks me out.
Yeah.
So is that the reason why cryptocurrency, as far as I know, cryptocurrency is not accepted at many banks, if any banks? Is there any like large banks that are currently accepting cryptocurrency, like for deposits, like Bank of America, Citibank, Chase? I haven't heard of anything like that.
Yeah, I mean, and MasterCard is about to accept it. Visa already accepts cryptocurrency.
Okay.
And so I don't really know what she's talking about.
Yeah, I don't know. It's a little confusing. But if any viewers have more of a handle on this than we do, hit us up in the comments.
Please. All right, so okay, there's that piece I was looking for. I guess it's all the way at the bottom there. But awesome. So it says 90% of total Bitcoin supply has been mined. So as of Monday morning, 90% of the total Bitcoin supply of 21 million has been mined according to data from blockchain.com. The remainder is not expected to be mined until February 2140. Until then, miners can continue to earn Bitcoins. Bitcoin operates on a proof of work model, which means that the miners must complete to solve complex math problems to validate transactions. It's not an easy process. Reaching the 90% milestone took 12 years. Reaching the 90% milestone took 12 years. So, yeah, thanks for pulling up this article. So it says here on yahoo.com, 90% of Bitcoin's total supply is mined, but price continues to dip. Bitcoin reached a new milestone yesterday, but the cryptocurrency market continues to underperform. Bitcoin's value is currently down by more than 30% from the all-time high it set last month. Only 10% of Bitcoin's 21 million supply is left to be mined. New data from the blockchain tracker, blockchain.com, has revealed that 90% of Bitcoin's total 21 million supply has been mined. That means that the 18.89 million Bitcoins are already in circulation, with the remaining 10% yet to be mined. According to Bitcoin's algorithm, the last coin will be mined by 2140, which is nearly 121 years from now. The mining difficulty will continue to increase while the mining reward is reduced by half every 4 years. Does that make sense, Mike?
Man, I'm kind of confused in terms of, I don't know whether I'm confused about the algorithm. I'm not sure exactly what factors are affecting this. The first thing kind of comes to mind with me, and we kind of talked about this. There are a lot of huge players, a lot of corporations, and Warren Buffett, whether he admits it publicly or not, is also in play now. So the big players are snatching up, Bitcoin like crazy. So Is that affecting the algorithm or the mining, or is there something that we're missing?
Well, I just think that it just has to do with how Bitcoin was programmed, you know.
Okay.
And I mean, the difficulty is increasing with more transactions on the blockchain and more people, owning Bitcoin and stuff like that. So the more peer-to-peer activity is going on the blockchain, I believe that increases the difficulty for mining. But in terms of the mining reward being reduced, I think that's in the initial nature of the program or the software.
Yeah.
Yeah.
Okay. Yeah,
So,
I didn't take that into consideration, but yeah, that makes sense.
Yeah, because it says here that the mining difficulty will continue to increase while the mining reward is reduced by half every 4 years. And it took only 12 years for 90% of Bitcoin's total supply to be mined, which is very interesting. It took only 12 years for 90%. But it says up here, according to Bitcoin's algorithms, the last coin will be mined in 2041. And I believe that the reason it took only 12 years is because the difficulty was way less earlier. So as people were getting into it, the hash rates were a bit lower and the difficulty was lower. And so people could mine big blocks of Bitcoin back then, as opposed to now. The computational mathematical equations to solve requires supercomputers, super mining rigs, as we saw last time on your segment, Michael. And it just takes a whole lot more processing power to mine these things. And I think as the time goes, it's just going to be super hard to get a Bitcoin because the math problem is going to be crazy.
Yeah, that takes time.
Yeah. And if I can read just a little bit more into this article, it says that Bitcoin mining hash rate suffered earlier this year after the Chinese government cracked down on crypto mining activities. However, the mining hash rate was close to its all-time high level last week after it hit 179.5 hash rates per second. The recovery was thanks to the migration of the Bitcoin miners to countries with more favorable laws, such as the United States, Canada, and Kazakhstan. Now, dig this. In the United States, do you guys know which state has the most crypto miners in it?
I would say, I think it's kind of following history where mining kind of began, like in the old West.
I like that.
like maybe Colorado, maybe.
No, not Colorado. I'll just go ahead and say it. It's Texas.
Okay, yeah.
So Texas right now is they're flocking to Texas, and I think most of the Bitcoin in the world right now is being mined in Texas.
Wow.
So it's definitely a huge change,
Okay.
And this is just what's going on right now. So I think definitely Bitcoin just remains that store of value, remains that store of value. And it's just something interesting to pinpoint. What do you think, Mark?
I wanted to touch a little bit on the topic about Bitcoin being more difficult. If you can scroll up a little bit, where it says according to Bitcoin's algorithms, the last coin will be mined by 2140, which is nearly 120 years from now. And it mentions the mining difficulty will continue to increase while the mining reward will it's reduced by half every 4 years. So when they mention the mining reward is decreased or reduced, they're just referring to the miner's reward for it, but is the value of Bitcoin also going to be reduced for investors, or they're just referring to the miners?
They're just referring to the miners, because the miners are basically the ones that operate on the ledger, and they help with they're the ones that help create and mince the Bitcoin, and then they sell it off to the market. They sell it off to the market so that where the market has the ask and the bids, you know, to either obtain or for them to either sell or obtain themselves. So basically what's going on here is just that it's whenever a miner or just somebody on their computer solves an equation using their processor based on the software for doing this stuff to obtain Bitcoin, that's called mining. And in that process, if they're able to solve a very complex equation, they're able to gain some Bitcoin, and then gain some Bitcoin based on that block. And so the amount of rewards is basically equivalent to the amount of Bitcoin that they're able to gain from that block. Now, in the past, when people were mining based on that certain block that they were mining from, they could gain a whole lot more Bitcoin because the difficulty was less. So in the past, they could, if they solved the complex equation, they could gain like 100, whoever solved the equation first, they gain like 100 Bitcoin per block. But now, since the equation is very low, it's probably just 1, 2, or 3, or even a percentage or a fraction based on the type of equation that's being solved, and the reward is a fraction of that, and you only receive just a little bit of the Bitcoin. And I know there are sites where you can go and check exactly how much Bitcoin you're going to receive based on the hash rate and stuff like that. And so, does that make sense?
Yeah, from the miners' point of view, I mean, what's the incentive? What's the incentive to continue to mine? I don't really see the incentive. Is that one of the reasons why the algorithm mentioned it'll take nearly 120 years to mine the rest, because they're anticipating the miners will drop off, it'll be less miners, or strictly because the complexity of mining?
That's a good question.
Yeah.
You know what? If I could chime in on this, it kind of, I can kind of see how things are going to progress, because the way they have progressed. You know, initially, it was people on their laptops, you know, who was doing this, and then it started progressing up to bigger computers, and even now you see companies kind of, you know, buying land adjacent to hydro dams, you know, to increase their computing power. And to be perfectly honest with you, you know, there was some mention of the Chinese actually using supercomputers to mine Bitcoin. So I think, as like Michael said, as the difficulty increases, you're going to need more computing power. So, you know, Joe Blow with his Lenovo is not going to be in play for much longer. If he's still in play right now, you're going to see these huge corporations, you know, with all of their money and all of their power and all their, you know, these data centers that span, you know, the oceans. They're going to be the ones who are only going to be able to, well, I'm not going to say only, but majority, I can see them becoming the majority.
Yeah, I definitely see that too. I agree with you, Michael. Like, monopolies are definitely going to come into play sooner or later into this.
Yeah.
But I also wanted to expound on what Mark said about what's the incentive. You know, back in 2009, when people were mining blocks for very cheap, You know, that question could have also been posed then, you know, because at that time, one Bitcoin was probably just $1 or so at that point in time, you know, but now one Bitcoin, if the miners chose to hold some of that Bitcoin that they just mined on their computers for free. I mean, if you don't take into account electricity that they use to mine it and that type of affair, then they could have held on that and made gains and then put that crypto into the market, back into the market for, you know, traders to make asks and bids on that, you know. So it's just their incentive is being part of the minting process and being part of that minting process. I know there's other incentives that I may have missed, like other technical incentives, like validational incentives that I may not be talking about, but just based on just the basic process of mining, they get to obtain one Bitcoin, and usually if they don't dump it, they can hold it and make a profit from it later when the price goes up, you know. So I think that's one good incentive, just the price going up and holding it. And so
that's what I was actually just thinking also, because as you mentioned in this article, it's already been 90% has been mined, and as we all know, that when things start to become rare, the value of that thing becomes increased. The value of that thing increases. Right. So if we get down to 10%, 5%, the farther down the percentage goes, I'm assuming that value is going to increase. And it's funny because I actually saw an article today where somebody predicted that the price of Bitcoin is can get up to at least $1 million. And if that's true, then I do see the miners being able to. That would be a pretty good incentive to actually try to mine and get even for one Bitcoin to be worth $1 million.
Right.
That's a pretty good incentive.
But then again, just like in the past, one Bitcoin was $1, you know, and then it topped around 65,000. And so nobody knew that it was going to go to 65,000, I assume. But I mean, people were very hopeful based on the technology that this was a good project that they're in. So I just think that, man, it can go, like, the sky's the limit with this stuff. We just do not know. But we do see the wheel has already been turned. Adoption is already in it. You can't say the billionaires are not in it. You can't say the institutional corporations and those people that lot, they're not in it. You can't say that it's not being played at the Super Bowl commercials and stuff. You can't say that this is here to stay. And so it's just, all it is just a matter of time. It's just a matter of time before this system, its tentacles spread and possibly even take over the fiat system.
Yeah, I can definitely see that happening, because fiat has been decreasing in value for decades. So, and the big players, they always go where the greatest reward is. So it's inevitable.
Awesome.
So
all right, I think. Sorry, go ahead.
I was just going to make a comment that it sounds like you guys don't believe that cryptocurrency is just a fad.
Well, you know. Yeah. No.
Nah, it's not a fad, you know, and people have to stop. They got to stop daydreaming, man, and kind of just get that cold water splashed on their face, because this is reality. Yep. Like, you guys are starting to see this pop up everywhere. And, you know, if I were you, man, I don't know where the world is going right now, but what I am for sure about is that wherever we're going to be 5-10 years from now, crypto is going to be doing some crazy things in that world, you know.
Yeah.
So it's up to you guys, you know. I think on our next segment too, we're going to be reviewing some of the Super Bowl commercials. And so I would invite you to, because there's one commercial that pertains to just this very opportunity about people just, you know, neglecting opportunities when they see it and just keep missing out on it. So the opportunity is right in front of your face. You guys see that this is the new financial system. You know, it's the internet before the internet was popping, and it's right before your face. This is the new financial system of the world. You know, throw all the conspiracy theories away, throw all of that stuff away. This is the new financial system of the world, and whatever it does, you guys can still be in it early and still try to, you know, figure out how it works, figure out, you know, what you'll do early, so that when it comes to the time that it actually starts to skyrocket, you guys already know 100% what you're doing in this thing, because it's inevitable. All of this stuff that's going on, it's inevitable. And I'm talking about this stuff like it was just created yesterday. Look, people have already made billions from this stuff, you know. So I mean, it's just inevitable that, you know, it's going to take over the world this time. Right now, it's already proven that it's here to stay. It's not going anywhere. The next step is world domination, you know. So it's up to the audience. It's up to the audience what they think. That's just my opinion.
Can I just add one last thing to that?
Mm-hmm.
If you need more proof and final proof, look at other areas. Facebook just renamed themselves Meta, and they're going all in the metaverse,
Yes.
which is the digital environment. Microsoft has been positioning themselves for years for this, to be able to add, because a lot of their offerings now are cross-platform, you know, so people are even saying that they're probably going to beat Facebook in that space, and all the other companies that are going all in this digital landscape. So what do you think is going to be traded and used for currency in that space? Exactly. Digital currency.
Exactly.
So,
and Michael, don't forget about Twitter. Now on Twitter, you can tip somebody with Ethereum on Twitter.
I didn't know that. I did. Okay, let me brush off my Twitter account. And go.
You can tip somebody on Twitter.
Go make some ETH. Okay.
All right. Awesome. So I think that's all the time we have for this segment. Let us move to the next segment. From now, we're going to move on to our next segment, which is our beautiful, sizzling hot Q&A with Mark. Mark, why don't you take the wheel and go when you're ready?
Thanks. I was still kind of stuck on that other currencies not transferring value, because last time I checked, Dogecoin was like 15 cents. So I'm pretty sure that's probably what if that's what they're after, not transferring value, I think they've achieved that.
Yeah.
Wow. All right. and hopefully, you know, they won't make you eat your words and go up to 20 cents tomorrow.
Right.
You never know.
No offense, Elon. Okay, so we have questions from the crypto community. Questions that's come in, and they're kind of anxious to get their questions answered. First question that was asked, this person asked, what's the difference between Bitcoin and Ethereum? What's the difference between Bitcoin and Ethereum?
Yeah, I think that's kind of a good question. Definitely, along the sides of the 101s in this ecosystem. So I think the difference between Ethereum and and Bitcoin is basically the networks. Ethereum uses decentralized smart contracts, whereas Bitcoin operates more as a store of value, as we're talking about before. That Ethereum is based off that Web3, the blockchain protocol that has that. The blockchain network that has that decentralized protocol. And Bitcoin operates off what is known as the Lightning Network now. That's what it's upgraded to now, but it just operates off of more. It still has the blockchain technology, and it still has that decentralized nature. But I think what differentiates these two is the smart contract protocols, which are more of the Ethereum, which gives Ethereum the tokenomics, which gives Ethereum the ability to use the smart contracts within the software, so that you can have so much more utility with Ethereum than with Bitcoin, and that's just the way I see it.
Okay.
Yeah, I agree. In terms of, for me, the most unique aspect of Ethereum is that whole network, because it's being copied, it's being emulated, it's being forked every which way to Sunday, because people see the value in that. People see that you can do so many more things other than, and like Mike said, they still hold a store of value. It's, if I'm not mistaken, it was the second highest, most valuable coin behind Bitcoin until Coinbase, right? Coinbase's coin overtook it, if I'm not mistaken.
Which coin are we talking about?
Ethereum.
Ethereum was always second. Bitcoin was always ranked first.
Yeah, but Coinbase, if I'm not mistaken, I heard something recently where they say Coinbase's coin is actually now the second.
Yeah, that's USDC, but that's a stable coin. I don't think it's ranked above. I think it's still Bitcoin, Ethereum.
Okay. All right. Well,
but maybe you're right. Maybe I'm wrong. I gotta.
We'll look into it.
That.
We'll look into it.
Yeah.
We'll look into it. But again, it's valuable. It's extremely valuable. But it also, at the same time, it holds that value in terms of its network, the way it operates, the smart contract platform, and those aspects of Ethereum are being copied more so than what's happening with Bitcoin.
Yeah.
Absolutely.
And I've also noticed that there were quite a few other coins that actually operate off of the Ethereum network, if I'm not mistaken. Because I've saw other coins that use the smart contracts the same way that Ethereum and of the Ethereum network. I'm not sure about any other cryptocurrency that uses Bitcoin or that's branched off from Bitcoin. Is that correct? Because it seems like Ethereum is almost completely different from what Bitcoin is. Ethereum is more, it has its own network. Is that correct?
Definitely. And I think Ethereum is its own separate blockchain network.
Okay.
And Bitcoin has its own network. Solana has its own network. XRP has its own network. Soon to be Pulse Chain has its own network. These are all, chains that have their own network. Even, for example, Litecoin, was also once a fork. No, people don't know this, but Litecoin was a fork of Bitcoin. So Litecoin split out of Bitcoin at one stage. And the Ethereum that we see today, there was another Ethereum before, and the Ethereum that we see was a fork from that Ethereum, because if you go and you see, there was an Ethereum Classic, and then it forked over, and then very soon they're trying to make plans for an Ethereum 2.0 to make things faster, and probably that's going to fork on over too. So it's just different chains, different codes of how they operate. But the unique thing about Ethereum is that it uses smart contracts within a decentralized nature, which gives the tokens that are based on Ethereum, based off Ethereum, this utility that just cannot be found on a Bitcoin network.
Okay. Nice. Nice way to break it down.
I appreciate it. Thank you.
And the next question from the crypto community says, apart from being a payment system, what are the other functions of cryptocurrencies?
Michael, you want to have this one first?
The other functions of cryptocurrencies in terms of primarily their utilities for the most part. Like we just got through talking about some of Ethereum's utilities in terms of using smart contracts. The way the network itself is constructed, and to be honest with you, when I think of utilities right now, because I've been neck deep in NFTs lately. Mm-hmm. So in terms of even things like NFTs, you know, their unique utilities. Some of them are, what's the term I'm looking for? The rarity. You know, there's certain aspects you can build into an NFT that makes it more rare, and there are platforms that actually there are criteria for that, and there are platforms who actually monitor that and set, you know, numberings for how rare, you know, an NFT is. So it really varies depending on the currency itself. What their utilities are is kind of what sets them apart from any other crypto.
Okay.
Yeah, and I totally agree with what Michael said. You know, what other functions of cryptocurrencies? You know, there are many crypto tokens that have different incentives. You know, for example, we have utility tokens. As Michael said, we have proof of stake tokens. We have the main cryptocurrencies of the blockchain, Bitcoin, Ethereum, all those that I mentioned before, and tokens based on, you know, smart contracts such as NFTs, which I know Michael is really interested in. And he's going to let us have the rundown on that later. You know, liquidity provider tokens and other decentralized finance tokens that have other financial incentives. So there's just a lot of tokens in the game right now doing so many things, and it's just up to us to discover them for ourselves and see if they work out in our own financial plan, research, whatever you want to call it.
Okay. So tokens are, because when they mention about the other functions of cryptocurrencies, tokens are part of the cryptocurrency area, correct? Because they may not know that.
Yeah. It's all in the same ecosystem.
Okay.
You know, and, you know, as we described earlier, like cryptocurrencies is just basically what the main coin of the blockchain, the main coin representing that blockchain technology, such as Ethereum. Ethereum is the main coin of the Ethereum network. Bitcoin is the main coin of the Bitcoin network. Mm-hmm. The Binance coin is the main coin of the Binance network. But then tokens are just tokens are coins that are based on the contracts of the of that blockchain. So they're built on top of that blockchain. So a token of Ethereum would be the Uniswap token. Okay. That's built off of the Ethereum blockchain. Another one for Binance would be the Pancake Swap token. That's built off of built off Binance. You know, funny name, but that's what they name the Pancake Swap. Is the exchange and all of that fun stuff. So that is the general gist of it.
Okay, that's good information. And just for if anyone has any more questions or anything about tokens that you want more information about, that we actually did another episode regarding tokens, NFTs, on a previous episode. You could always go back and look at one of our previous episodes regarding NFTs. We kind of break it down quite a bit about what NFTs are, how they function, and how they're used. So you can take a look at that episode on the previous episode.
We can link to that episode in the description.
Yeah.
Right. And can y'all leave some comments? Leave some comments. Don't feel shy. Leave some comments and drop them there. We will answer them for you. Do not feel shy. I know y'all have questions. I know y'all have tons of questions. Whoever watching right now, leave those comments so we can actually answer you. Yes, you. We can answer your questions. All right. We want to. We love y'all. We appreciate y'all. We want to answer your questions. Drop those comments.
Okay. For example, this next question, watch how this next question gets answered. Question is, why does the crypto market drop when the stock market drops?
That's an interesting. You want me to have it, Michael, first?
If you don't mind, I'll go first.
Yes, please.
And this is there's a lot of speculation. And a lot of people have pretty much admitted that they don't know for sure. Companies have admitted they don't know for sure. So my take on it is, when you have two platforms like that, the majority of people who come from that stock market environment over to crypto tend to bring their investment strategies or habits with them. So when things kind of go, like, say for instance, it's kind of one of the differences between long-term investors and day traders. You know, day traders, when things kind of start dipping, they're jumping ship, they're selling. You know, and a lot of these same type of investors, when they go into crypto, they use those same strategies. So it kind of, to me, again, this is kind of my take on it. It kind of makes sense that they would mirror themselves in that way in some instance. The other thing is, a lot of people follow certain investors like Warren Buffett and folks like that, and they tend to do what they do. You know, I'm not saying that Warren Buffett is over there, you know, wreaking havoc, but I'm just using him as an example. But people do tend to mimic their investment strategies. So to me, it would kind of make sense that those two platforms would mirror each other.
I completely agree. You nailed it. And just to add just a little bit to that, you know, not all crypto drops when the stock market drops, but generally, as you said, Michael, most of the top ranking cryptocurrencies have a tendency to follow Bitcoin price movements, and Bitcoin usually absorbs, as you said, Michael, once again, a lot of economic energy, especially from the big institutional players in those markets, you know. And that's why when there's usually a scare in any of those major markets in the world, it usually has somewhat of a chain reaction and further adds to the volatility in the crypto ecosystem. But that is just, but that's not a constant. That's just an observation. And definitely, if you ride on that, you might miss some other opportunities in crypto, because some cryptos operate completely contradictory to what I'm saying and will moon while the stock market is having a really bad day. So it just depends on what you know about your specific project, the community involved, and what the developers are doing with it.
And I kind of watched that for a while also. And both of you make excellent points. And like you said, all cryptocurrency, it doesn't react that way. So I've noticed that even though, and since the beginning of the year, since seen Bitcoin, Ethereum, Cardano. I've seen other stocks that have gone up in value, they've gone down in value. They've really fluctuated a lot along the lines of the stock market. But I have noticed that Avalanche, it's been stable almost the entire time. Not only has it not really dropped, it's dropped a little bit, but it hasn't really dropped the same way that Bitcoin and Ethereum has. Avalanche has stayed consistent, and it's been growing even more recently. So I think it, like you said, Michael, I think it's the way that people invest. I think sometimes when people invest, some of the same people that invest in the stock market are investing in cryptocurrency, and they react the same way. So if their stock is dropping, they'll sell. Same thing in cryptocurrency. If they see something happening, if they have a fear of Russia invading Ukraine, or they have a fear of the federal government imposing regulations, they may sell. They'll sell the stock, they'll sell their cryptocurrency. But for those savvy investors, and you never know, savvy investors may be the ones that are investing in Avalanche. They're the ones that are steady, and they're the ones that have that rock solid stability, because they know how to invest for the long term. And I think that's why Avalanche has been stable.
Spot on, Mark. And those are the projects that I love. Those projects that are hardcore during times of extreme volatility. They keep that side movement. They don't really dip too hard or do anything crazy, and they really time their moments to pump and stuff like that. Those are the type of cryptocurrencies at this stage of my maturity in the game that I really like. And Avalanche, I will not lie, it's one of those that I was talking about earlier, that whilst those other internet companies were making their move in the early 2000 Super Bowl, Amazon and them were in the cut. And I feel like Avalanche is one of those ones in the cut right now, getting everything tidy and clean, and is going to pop pretty soon too. This is not financial advice, by the way, just my own speculation, ladies and gentlemen. But it's just one of those things that I feel strongly about, including the whole Pulse chain ecosystem and stuff like that. It's in the cut, it's getting cleaned up, ready, and it's a beast. There's some beast out there. They're like, okay, we're gonna let the little ones play, have their fun, and then we're gonna come take over. And so you just have to be really vigilant. I feel so. But yeah, spot on, Mark, spot on.
Thanks. All right, and that was the last question from the crypto community.
All right. Awesome. So thank you so much for tuning in. We really appreciate y'all. Please do not forget to subscribe, drop a like, and hit that notification button if you haven't already done so. We have some nice links in the description, so please make sure you go through those links and see if you like something. Also, kindly leave some questions. As I said, leave those questions in the comments below so we can try our best to answer them for you. Once again, thank you so much. We'll be on same time next week to give you that relevant crypto information when you need it the most. Peace.
Adios.
Tomorrow can be a better day if you're looking to get some figures for better pay. Invest in yourself, man, that is the only way. Get your clout up, 100K followers. How you do that, man? By not being a follower. How you get there, man? Hustling and bustling. Then you spice it up, put some brain